This is Angela Barrios here. This video is sponsored by angelabarrios.com. You may find the link in the description below. Click like and subscribe and hit the bell so you can get notifications of new videos we load. I'll be watching for your comments, so hit like and share with others.
So hello everybody, this is Angela Barrios. We are starting this broadcast live today, so if you're out there, let me know. Just holler at me, put your name, a little hand. So welcome to tonight, as I promised, and we have been advertising. We were going to engage in a series of videos, live streaming, just to talk a little bit more about important subjects that matters to you, matters to me, matters to everybody. So for these past days, we decided to bring to you something that matters to the family and critically matters to a personal level, and that is the debt crisis, is dealing with debt. So if you're joining there, thank you for being with me. This is Angela Barrios. I am located in Fort Lauderdale, Florida. I have been for 20 years in the financial services arena. I deal with real estate, I deal with investments, instruments, and I also deal with insurance. And I am a certified financial coach, and I am very, very glad to be here and be able to kind of like share a little bit of important subjects that are going to make a change in your life. So I am glad that you are here with me. For those that are joining throughout the hour, and I am going to be very, very on the dot with the time. And this important subject is about dealing with debt. As we advertise, are you dealing with debt? Right? The debt crisis, not just at the national level, at the global level, but at the personal level, is just astronomical. Is out of hand. We just we just cannot handle it anymore. And so for this decade, I propose to myself and to my team and the people that work along with me to do something about it. This is not just a talk. This is about consciousness. This is about making a change in the direction of your life. If it's true that money is not the most important thing, and I might agree with you on that, it is also true that you cannot live without it, meaning that you use it on a daily basis, and we commit to do a lot of things with it. As a matter of fact, quality of life has a lot to do with the financial freedom that you have. So let's dig into the subject, and if you're there, ask questions, stop me, and I'll be able to answer those questions along. So now I imagine that you're thinking, I don't want to really deal with that. It's a really difficult subject. It's very stressful. I just need to make more money so I can pay my debt. And that is basically what most people think, that they just gotta make more money to pay the debt. Now, debt goes beyond just making more money. Yes, you need to do that. Yes, it is important to make more money, but it's also important to understand where you are standing, what has been the problem that lied beneath, that brought you to this time of being in a crisis with money. So there's some ways of thinking that you have about that. There's some ideas that you have adopted throughout that allow you to accumulate debt like it's okay. So there are different types of debts, because debt is debt, but it's like, if you allow me, it's like sinning. Like a sin is a sin. So if you lie, it's a sin. If you kill, it's a sin. But it's still a sin. But it's different kinds of sins. So it's the same thing with debt. So there are different kinds of debt that we need to learn to deal with, and it's important that you know how much of it you have, how do they work against you, and how are you going to get rid of them. So if you bear with me, this is something that's going to be very interesting. So let's talk about revolving debt, or let's talk in general about the debt trap. Right? If you're only paying the minimum amount, talk about credit card debt first, right? Because that's the consumption subject that it's killing America, right? Started up a few decades ago when they started showing us plastic and how simple it was to swipe. And since then, it has become a culture for everybody, even for little ones. Parents give the plastic to the kids so they can pay at the grocery shop, because we're getting the kids used to the same thing, and they're about to remove that one too. So before they even move ahead on us not even using any plastic, which is in the making, if you don't know, let's talk about this one trap of the credit card system. Okay, so if you're paying the minimum on your credit card debt each month, you may not be making an impact on the balance. I'm sure you know this, but you can just not make the minimum. It is a commitment, it's the minimum they ask you to do, and it sounds very enticing. Ooh, I took $300, I went on a shopping spree, and I only have to pay $25 a month. It sounds super great, it sounds fantastic, but it doesn't help you. Right? It doesn't help you to pay the balance. The reason why is because most credit card debt is considered what we call a revolving status account. It's a revolving debt. And what does revolving mean? It's an interest that's calculated differently every time, right? It depends on how much you spend. There is going to be an interest calculated above and beyond the balance that you continue carrying on your credit card. That's why you have $400 limit and $300 balance. You go use another $100, and then even though there's a minimum every month, you're still not bringing the balance down, and it's frustrating, right? For many people, in 20 years of me helping people throughout this and many other subjects, it is frustrating. 500 might not be frustrating, but the numbers I'm going to share with you today, they are very frustrating. Now, credit card debt is considered revolving, so that's one kind of debt. Now, another kind of debt is fixed. And when we said revolving and fixed, we're talking about the interest, how the interest is applied to the money that you borrow. And I want you to kind of like, if you're taking notes with me today, if you are kind of like, let me just get some of this, just put the word borrow really big and underline it and embrace it in quotation. Borrow. That goes against life. That goes against freedom. Borrowing. It's a term that's not for just everybody. But the problem is, like, commonly everybody uses it normally now. So now, fixed debt, on the opposite of revolving debt, in a fixed debt payment or in a fixed debt account, you are scheduled to make payments according to a set interest. Therefore, you always know that your payment is the same, it doesn't change, and there is going to be an end to the total amount of debt that you are going to amortize or pay down. So with the revolving kind of debt, you only know you have a minimum. They always tell you you have to pay a certain amount. That's your statement balance, and there is no end to that debt because you constantly borrow from what you have available. They've gotten us used to borrow from what we have available. So You can easily tell when you are paying off the principal debt on a fixed kind of a loan because it's that same interest. So it applies the same every single month. So it's like the car, right? The car, well, it used to be 60 months, it's now 72 months, and in some cases more than that. As I can see that the car industry has been acting a little more like the real estate industry back then, and they have been providing this source of like credits, or I should say debt, that's gonna be paid in 72 months or more, so you actually can get a car. So very interesting it is just to know a few numbers. So I'm going to share with you an example, and I know I don't have a board here to actually share with you, so bear with me because I'm going to make it very, very simple. So for those that are joining, thank you for joining, and thank you for coming to learn a little bit more about dealing with debt. And so revolving versus fixed, I'm going to give you two examples. Revolving is like having credit cards because, like I said, you have an interest, but it's applied to a certain amount and is recalculated constantly. A fixed debt, you always know how much you are going to pay, like you do on a car note. Okay, so I'm going to give you this example. Imagine that you have $17,000, and don't go crazy with the numbers, just bear with me. $17,000 in credit card debt in general, $17,000. Now, in average, let's just say you pay a 15% interest on that amount. That is pretty normal, but that is very low nowadays. Now let's talk about the fixed one. That was the revolving. So let's say you went and bought a car that cost you $17,000, the same amount, you see? It costs you $17,000, and you pay 15% interest on the car note. Remember, the car note is a fixed debt. The the credit card is a revolving debt. This is what happens. Your monthly payment for the credit card balances you have is going to start at around $380 a month for $17,000 in debt. For your car, you are going to pay about the same thing, $380 a month, and you know it's fixed and it never changes. Now, here is what really hits America, your household and your pocket. When it comes up to paying off the credit card debt, for those $17,000 at 15%, it's going to take you 40 years, 40 years pretty much to pay. Just say you don't add anything else to that credit card balance, it's going to take you 40 years. Now, when it comes out to the fixed debt, the same debt, $17,000, in 5 years and 6 months pretty much, you're done and over with that debt. Now, that's alarming, right? Most Americans, once they exit college, they work for 40 years of their life so they can retire. $17,000 at 15% takes you 40 years of payments. That is a lifetime, you guys. It is alarming. Now, let me give you something even more. So I told you $17,000 on each side, and because they are different type of debts, like sins, they are different type of sins, then when it comes up to the cost, this is what happens. Interest-wise, on the credit card, you're gonna end up paying $20,000 on top of the 17 you borrowed. What? $20,000. I have to stop again because you can do a lot of things with $20,000. $20,000. Just think how much it would take you to accumulate $20,000. Don't tell me, but if you want to share it, you can go ahead. $20,000. Now, on a fixed debt, you're only going to pay about $8,000 in interest. Only 8. Compare one with the other one. When it comes up to the cost, in between the revolving debt or credit card debt and the payments for that car that you bought, you're gonna end up overpaying $13,000 on credit card just because of the kind of interest, how the interest is applied. You know what's difficult? What's difficult is that you don't feel it on a monthly basis because you are not looking ahead 40 years. But when you have the numbers and you understand, then you're empowered and you're able to make better decisions. So I already explained to you guys, debt is debt. It's like sinning, but different kinds of debt. Somebody said to me, some kind of debt is necessary. But let me tell you something. No debt is necessary. Okay, there is always a way to accumulate money and purchase cash. I know we live in a credit society, so it is your responsibility and mine to understand how to use the credit that you are going to borrow. Now, I'm gonna share with you guys some myths, and this is important before I move ahead into a little bit deeper into the subject. But these are some myths. These are myths that I have found throughout the years. When I meet with people and then we talk about this subject of debt, and for the wife is one feeling, for the husband is another feeling, or for the partner is one feeling, the other partner is another feeling. Believe me, everybody deals with this debt, and there's a lot of feelings involved. So myth number one that I'm going to share with you, these are the things that I have learned. When I meet with clients throughout the time, I understand that myth number one is that the credit card is your own money. Credit card is your own money. It's like they sent you a credit card with $1,000 limit, and all of a sudden, because the plastic is in your hand, you think you have $1,000 in your pocket, and you don't. So next time they send you another credit card, and if you're not understanding the game that they are playing with you, now you have another $3,000 worth of credit limit. But because of the myth in your mind or in people's mind, that credit card money, it's in your wallet, meaning it's in your pocket, meaning it's mine. And when I need it, Angela, I'm gonna use it. So most people, and we're gonna talk about that in a little bit, don't have any money to back that off. What I mean by that is they don't have the savings to be able to handle the credit. And that's the myth number one. There is another myth, and in regards to acquiring debt, and that is once you purchase a car, a vehicle, and this is recent, it's been for the past 30 years, 3 decades, people have been thinking this way. Once you purchase a car, you have to upgrade cars every 3 years. It's funny, because as soon as you hit the 3rd year, you're looking into your car is not working anymore. It doesn't smell as new anymore, and therefore I'm looking at different other cars around, and I feel the need to upgrade because I work too hard, and there are many different underlying situations here that play a role. It's an emotional roller coaster on people's life that make you go turn the car in, and all of a sudden, just as a magic kind of call, email, or text message, somebody tells you you can turn your car in and we can get you a newer one. And so it sounds like a great deal, but at that point, what you do is you start accumulating upside down debt, meaning that this debt, this is like the sin of, this is the capital sin. Because on top of the debt, you are going to acquire more debt for the same item that doesn't value the same anymore. It's upside down. So this is like the capital sin. That's worse than murder. Now there's another myth, and that is you can book your trip and vacations on your credit card, and again, you can go ahead and go on vacation, but if you don't have the savings to back that up, you just can't go on credit card. Now let me back off a little bit. You are able to go on the credit card, but no, once you come back, you're going to be very stressed out to try to pay that credit card down. So now all these days that you spend maybe drinking, partying, going from places and swiping the card, charging the card, because nowadays you won't swipe it. They just keep the number and they just load your card. So when you come back and you get the statement, it hits you right in your face, and now you feel the stress. And it's a stress accumulated. You knew it was going to be like that. So that's another myth. And most people enjoy great time, weekends with their kids, going to many different places, but they're constantly assuming a position of debt. They're constantly slaves of themselves in the system, because you don't have the finances to back up your spending. There's another myth, and I have plenty, but today I'm just sharing 4. This last myth is transferring balances on credit cards at a 0% interest for a year help you pay down your debt. And that is because out of a questionnaire that or survey to say, that I ask my clients to fill out, I have come to the realization that many people think that it's a strategy to get rid of debt. Let me just apply for another credit card at a 0% interest for 6 to 12 months. I'm going to transfer my balances over here, and I'm going to start making payments and bring the balance down. And you know what happened after the 12 months when the interest starts kicking in? Now you have multiplier debt. It's a very simple process. Most people don't see it. It happens very, very fast. So there you have it. I just shared with you 4 myths, and in this next half an hour, I am going to dig into some debt solutions. If you get to see this video at some point, whether it is for my audience in YouTube or Facebook here on Instagram, you'll be able to just go there, comment, actually DM me or send me your questions if you want to know more about this. Angela, it is necessary to acquire some debt. It is possible. It is absolutely possible that it's necessary to acquire some debt. Like what? Well, simply the mortgage or the note on your house. Because one of the things, even though I do not encourage to acquire debt, one of the things that we do acquire, hi Mr. Johnny, how are you doing? One of the things that you need to acquire is the possession of land. You have to be in position of ownership for as long as you rent the place you live. And besides accumulating credit cards and other debt or borrowing from relatives, I haven't even talked about that debt. That's another kind of sin. Remember what I said? There's different kinds of sins, but they're all sins. Well, okay, we're going to talk about that one in a minute. When it comes up to borrowing money to purchase a house, your main house, the one that you are going to live at, that is a one permissible kind of a debt, because it is better to be in position of ownership than to be in position of not owning anything. Now, when you're going to purchase your mortgage, or when you're going to go to the bank, whether it is here in the United States or globally in any other economy, what you got to do is you have to become a educated buyer. And if you're taking notes right there, you know what I want you to do? I want you to go write down educated buyer and underline that several times, just like you did with the word borrow. Be an educated consumer is extremely important, because what it means is you are going to educate yourself in the right way to utilize the tools that the system have available for you and me. Now, you can just not go with whatever people say. You have to make an educated decision, not a guess, but decision. So I'm going to give you an example of one kind of a debt, this kind of a debt, that's a mortgage. And what happens when you acquire this debt. My purpose today, you guys, and thank you for being with me. My purpose today is really just enlighten a little bit of what it is to deal with debt. There are different ways we can kill debt, we can get rid of debt and all that, and we're going to talk about that at another time. But today it's kind of like getting to conscious level of the kind of a debt, how to handle it, and why you got that debt in the very first place. So let's talk about the mortgage, the note on your house. So you're gonna go buy a house. Let's say it costs you $200,000 and it's gonna take you 25 years to pay the interest on it. You buy a mortgage that's generally 15, sometimes 20, and even 30 years. Most people get to buy a mortgage for 30 years. What I highly recommend is for you to buy a mortgage at 15 years. 30 years of mortgage means that you're going to spend 25 years paying interest on your house. And the last 5 years, you're going to end up really paying for the principal of your house. Remember, the banking industry, it's around to make money. They're not our friends. They're there to make money. Okay, have that in your mind. So if you were to borrow $200,000 to buy your own house, make a conscious decision to have an expert on your side that can make you understand the numbers on borrowing, what you're gonna pay every single month, how much it's gonna take you to finish up paying your mortgage. And do yourself a favor. Don't do with a house what most people do with cars. Change every 3 or 5 years. You buy a house so you can keep it for 10 years. I'm not asking you to stay in that house for 10 years. Hopefully, if you have a financial expert next to you, helping you with decisions or guiding you throughout, you will upgrade to a better place or even the house of your dreams before you turn 10 years in that house. But you don't have to get rid of that primary place that you bought. It is land, so it's possession. It's putting you in a position of ownership. So it's giving you purchasing power, to say. So now keep that house and learn how to buy your second property. That will be a much more wise decision. Remember, for every $200,000 that you borrow, you pretty much pay back to the bank 25 years worth of interest. Okay, you amortize very, very little, meaning that you pay the principal very, very minimum at the beginning, and it takes you 25 years to actually start making payments to the principal. So it is important that you understand this kind of debt. Now, after, let's just say 30 years, when you paid your house off, if you stayed in your house for 30 years, you pretty much bought a house for $200,000 and you ended up paying another $100 and maybe a little more just in interest. So basically it's a third of what you borrow, you're gonna end up paying back in interest. So we do dedicate a lot of money into paying this kind of debt down. So it is important that if you ever going to decide to become an owner, don't use the 30-year mortgage, use the 15. If you're gonna use the 30-year mortgage, please get yourself with a good guidance, financial guidance for you, just to find out the method once you purchase a 30-year loan, to pay that mortgage in half of the time. Other than that, just buy a place, just buy your home for a 50-year mortgage. So I said that I was going to talk about another kind of debt. And one thing that I have noticed throughout the years, you guys, is that when I do an analysis about the debt that the family has or the individual has, usually I ask, list all the credit card debts and their balances, and I ask for that first. But then I start asking about not just the mortgage or what you owe on your car, but I ask about medical bills. And that's one that if you are here in the United States of America, that is one that hits most people. Healthcare is very expensive regardless of what. And it doesn't matter what, when you are not prepared and you don't save enough, and a situation arises health-wise, you end up accumulating this kind of debt. Now, 8 out of 10 people in America, middle incomers, I'm talking about people that make between $25,000 and $375,000 in income a year. Most people at the lower range of income simply don't pay their obligations at this level because it becomes unbearable. Usually the bills are $3, $5, $7, $10, $15, $20, $30, $50, and $80,000 depending on the health situation. So this is another kind of debt, and if you're dealing with that and you need help, it is important for you to, again, educate yourself, get yourself with people that understand this thing, and look for the right outcome. You have to put up that fire ASAP as well. Another kind of debt that people deal with is the let me borrow from relatives. That's very common too. It's very common. And this one, as I have been witness of for 20 years from different clients, I realize it's very stressful, because once you go to a relative to borrow money, and this person is somebody you have to see, and you are not meeting the obligations because you're still getting in debt in other areas of your life, and you are not being responsible with that. And I'm not saying everybody, but many people are not responsible with it. You end up breaking the most valuable thing that you're supposed to keep, and that is a relationship. Our lives are made out of that. So there you have it. That's another kind of debt. If you know of another kind that I don't know, but for now we've talked about revolving kind of a debt. We talked about fixed kind of debt. That was like having credit cards, like buying a car, like buying a house. We talked about medical bills. Also talked about personal loans that you borrow. And there is one that's the cancer of America, of all the debts. And it's not like turning the car in and buying a better car and acquiring more debt. No, this is the cancer of the America, because it's the debt that you make your children acquire before they even reach their majority age. You know what I'm talking about, right? I'm talking about student loans. And in America, in the past couple of decades, we've become ferocious about just sending our children to college for a degree on debt. And we are not going to be responsible for that, because we are making our children responsible by sending them to college borrowing money. But that is the debt that is almost impossible to pay. That kind of a debt is not creating a good inheritance for your children, but it's actually making your children become slaves. So if you are dealing with debt, and you're dealing with credit card debt, if you are dealing with a mortgage payment, your car payment, a line of credit, if you are dealing with money that you borrow from a relative or friend, if you're dealing with medical bills, look, I just named 6. The 7 is like the seven capital sins, right? The 7 is the student loans. The student loans that we are allowing our next generations and to just acquire, like it's okay to have that, because they gotta go to school, they gotta get a degree, they need to be out there, get a wonderful job and stay in the job for a long time until they get to 65, 40 years after with no money in their pocket. And that is the kind of debt that is making our future generations being unsuccessful. We are not passing down houses free and clear of any inheritance. We are not passing down a good life insurance policy that protects us and leaves some money for our children. We are not passing down other than that. And this is for the majority. I want to share with you before we finish today, and I want to thank you for just showing up, for hollowing at me, for paying attention to the subject here on dealing with that. But I'm going to share with you something more. And these are just percentages that you can find on Google if you want to Google them. And these are just numbers for the United States of America. I did not pull up numbers from different other places, but I will for our next get together. And this is not to alarm you. This is just to impress upon you the necessity we have to educate ourselves, to get the knowledge we need, but to be conscious about what we're doing and the decisions we're making. Do you know that the average household income in the United States of America is $63,000? $63,000. Majority of people in America do not cross a six-figure income. And there is this kind of like oxygen, very breathable, very light at $100,000 in income that you cannot have if you are under that. So if you are part of this statistic of $63,000 in income, and that is the average. There are some places where people only make 25 or less than that, right? But in general, here in the United States of America, the average household income is $63,000. I don't even think here in Florida a family of 5 can actually live well with $63,000. That's kind of like paycheck to paycheck, or paycheck to every other paycheck, I will have to say. Now I'm going to give you another statistic. This statistic says that the average household debt in America, okay, my hair is going like this, is $90,000. You see, it takes a little bit out of me to say that. because I'd rather have $90,000 in my account than in debt. So that's the average debt. So the average family makes 63 but have $90,000 in debt. You see, income, debt, meaning that a third, 33.3% of what they make, they don't even have because they overspend. It's an overspending situation. 20% of Americans are debt free. Oh, but that's fantastic, Angela. 20% of Americans, finally, you tell us something positive. 20% of Americans, 2 out of 10, meaning the 2% of the population that made it up there, that have enough money saved, that are business owners and that are wealthy, that accumulated at least $1 million. Are you part of that percentage? 7% of the income in America is safe in a regular account. Meaning that if a family makes $60,000 and spend $90,000, average, say this same family saves $7,000. $7,000 in a lifetime. That's very difficult to swallow. That sounds like a lot of stress for a lot of people. That sounds like you don't have light at the end of the tunnel kind of thing. So I want to encourage you, when you get to see this video is going to be shared also on YouTube, and it's going to be on there on my YouTube channel if you want to reach out to it, if you want to ask questions. I just wanted to bring something that's important. I am going to have a session in Spanish for my Spanish speaking people on Thursday, and it's going to be about the same matter, dealing with that. So if you know people that speak Spanish, they don't speak English, or they didn't have the chance to listen to it, refer them to this video. Let them listen to it. Let them know. There you go, Cruz. Cruz says she's a million. There you go. You're part of my club. Girl. That's what I like. You're part of my club. So for you guys that have visited this conversation today, this live broadcast, I really enjoy sharing this information. There's so much more. All I touched today was dealing with that. Few different kinds of sins, if you want to call it. I just decided to put that name on it because it's not a religious thing. It's just something that people can relate to, and I'm sure you can relate to this. Okay, I'm not a religious person. I usually tell things like they are, and if I don't talk, it's because I don't need to talk. So I am giving you some information just for you to be conscious on where you are standing today and how important it is for you to make a change and get fully out of debt and become debt free and become financially independent today with the situation we've been facing for last year, 2020. It has become the platform for many of us, and I'm almost about to finish, for many of us to expand in different ways. But I'm gonna tell you what, if you're a business entrepreneur, if you just started up an idea and you think you're just gonna go ahead and make it, go ahead and plan. But plan for the future. Use the excitement, run with it, but also take a little bit to look into the future, what you are going to be making with that you are going to be receiving. I'll tell you what, if you get rid of your debt, you are going to be increased in income. The debt is like water that you pour on a glass. And for as long as the glass is full of debt, you cannot put any income. And I want you to understand that. Because in order for you to fill the glass with income, with abundance, you're going to have to eliminate the debt once and for all. And that requires a change in thinking. So if you want to get some help, if you are looking for some guidance, and you're interested in learning other ways to kill that sucker of that, let me know. I put you in contact with the right people. I so much enjoy this kinds of talks. Thank you, Cruz, for being there. I think I saw Janet over there. Maybe Yvette came by. I think we had Johnny Rodriguez, the great Johnny Rodriguez, showing up too. And we had other people. And just look at the possibilities. And remember this. Debt is like sinning. Okay? There are different kinds of sins, but bottom line, different kinds of sins are just sins. Okay? So debt of revolving debt of credit cards, debt of mortgage debt, debt of borrowing from family members, debt from medical bills, dead from all the 7 different capital sins that I mentioned today. All that dead, you guys, is the same sin. It comes from the same frame of mind. And if you have a specific situation with debt and you don't seem to be able to get rid of it, you need help outside yourself. You need to go get guidance outside yourself so you can kill the dead once and for all. Do not expect an increase if you don't take this and eliminate it fully. The water that's in the glass that's full of debt, that represents that dead, cannot be poured with abundance, because first you're gonna have to get rid of what's inside. Don't worry, the increase will come through all the businesses and all the ways in which you're going to make money. It's gonna come because you will make a conscious decision that you understand the kind of debt you are dealing with. This is not a self-punishment to put yourself in a category of a bad person, but it is a conscious moment to realize that you need a strategy to move from the lane of slavery to the lane of freedom. That does not happen overnight, but it happens every single day with discipline, consciousness, and constancy. You gotta be persistent into making that goal of paying down the debt and changing, switching the way in which you think about borrowing money. Be a lender, not a borrower. So be free, not a slave. So I thank you guys for being with me. We are almost about to break this session. Like I said, if you like this, it's going to be also available at my YouTube channel for those that want to kind of like recap on what I mentioned. Today, I just talked about dealing with debt. I did not go in debt, like in depth to say on more about that. We talked about like capital sins. That's all we talked about. That's all we referred to. It's just that a conscious moment that you are gonna take and run with, so you can actually make a full change for this new decade. You are going to free up your next generations by taking responsibility of where you are sitting with your debt and making a change. The change is going to happen in 2 ways. You first have to make a conscious decision that the debt is not going to be like this jacket that I have on, that you are going to be able to actually toss it off and not be with you. And second, understand that it's not going to happen overnight, but it requires a plan, and you have to work on that plan. And if you have not been able third and foremost, if you have not been able to get rid of the dead, what you need to do is you need to step outside yourself and go get guidance. Right guidance. There is a lot of information. Make conscious decisions. Be self-educated. Look for great advice. Just don't take things from the system because they are available. Many things are permissible to us. As a matter of fact, all things are permissible to us, but not all of them are going to be of a good deed for our lives. So thank you so much for being with me. This is 8:55 here in Fort Lauderdale. Wherever you are, this is going to stay here on my Instagram, as well on my YouTube and my Facebook. If you want to just reach out and send this also to